Hi. Good evening, folks. Um, yeah, so tonight I'm coming your way with another episode of analysis and expectation. Yes, I haven't been able to record. I think for the past 2 days. Yeah. Yesterday. Yeah, I couldn't record because I was caught up in a lot of things at work. So um, I had to take my time to also come back to the screens. I'm actually unable to record from my laptop because my recording software is not permitting me. I think what I have is a free version of one recording software which allows me to record just 5 minutes. I had some other recording softwares, but um, I think I can't even find where it is. So I'll work on that and then so that I'll be able to give you more clearer and concise videos from the laptop. I think that will give you a more clear view of the market and all. So quickly let's go through our chart and then see what's happening so far. So from the monthly time frame, we could see that um, we are in the month of what's the month? We are in the month of October, sorry, and we could see that we are already bullish on the market. And today's date is 16th. Yeah, today is 16th, and we're already bullish. Half the month is already gone. 2 weeks into the month, and we are bullish. Let's look at our weekly chart. So we could see that we are still flying up higher. I have a premise. My desire is that the market should shoot up higher and close bullish above this particular bullish candle here. When the market closes all bullish above this candle, it gives me a premise which I would explain later if it happens. So if it doesn't happen, so I'll probably give you another premise on why things didn't happen that way. But my expectation is that the market will close bullish above this zone, so that for this week, so that we have a particular premise to ride on. All right. Yeah. So let me take this off. Sorry. Let me take this off quickly. Then let's look at so last week the market actually closed bullish, but let me show you something that happened on the market, and I'll use that as a point of reference to explain some other things later. Look at 3 weeks. Let's say we are in a new week, so market has begun. So last week and last 2 weeks. So look at last 2 weeks bullish candle. Okay, look at last 2 weeks. We had this bullish candle. Okay, we had this bullish candle, and the last week we had this candle. Now let me show you what happened. When you look at this candle, the one for that closed for last week, the high and the low of it, the high and the low of the candle has been engulfed in last 2 weeks candle. Okay, in last 2 weeks price, let me put it that way. So you notice that this particular candle was engulfed, sorry, this particular candle was engulfed in in last 2 weeks candle. So normally what I expect is that, so these are some of the key important things to take note of. Normally what I'm expecting is that would have a very bullish week after such a week. We have a very strong bullish week after such a week, and then the weeks after. So my usual expectation is that price would go up further. yes, price will go up further. But more often, when such incident happens, what happens is that um when the market opens for the new week, what it will actually do is that it will retrace a little bit down. Like for instance, you notice the price retraced a little bit downwards. Price retraced a little bit downward here. Okay, before it reversed this current week. It usually will have to retrace a little bit down into and close either not just either, it must close inside the body of the previous week's candle, which was engulfed by the previous week's candle. I don't know if I'm making sense here. So for instance, like this particular candle, this one, this particular candle, the new week that we opened, which is this week, the candle was supposed to come down and close this week. The new candle, this one, price was supposed to come down, trade below the body where we have volume. I mean, not just the body, but the volume, So price has to come and take where the volume is before it begins to rally up. Okay, these are all price action. I'll try and get you further explanations later. But understand the basic concept now. So price had to trade into the volume before it bounced back up. Okay, so you notice that price traded into the volume, came down to this level before it traded up. So let's go down to the daily time frame and see what happened today. So you could see clearly that price came down to this point, okay, and traded down into this point. It was actually below this, but the truth is that it must not break below it. It must not break below the low of that particular candle. And look at where the low was, and it never came down to break below the low. So let's look at where exactly within the candle this particular today's price bounced back up, that it was not going to be able to break below. So if let's say you had set your trade looking at the picture from the weekly time frame, you could have easily set your trade. So let me show you something. So for instance, going back to the weekly time frame, now this is where the volume of the old candle is a body of the old candle. So now let's go to the daily time frame. Now the daily, what I'm expecting is that price shouldn't trade below the previous day's low. So what I usually have to do is that I'll have to set my stop loss just below it and wait for a very good entry. So now let's go to 4 hour time frame, and then the 4 hour time frame, this is where the market actually short and came to. So look at it. So here price was not supposed to trade and come into the mean threshold of this 4 hour time frame, this particular candle where we have this. So we expect the normal expectation is that price shouldn't trade and come down into this level, the mean threshold of this particular candle. So you put whatever trade that you set, your idea is that you have to put your stop loss at this level. Okay, knowing very well that price will never trade below the previous day's low. Okay, so now let's see why price had to open. So let's look at this week. When price opened, it opened from this point. It price opened from this. Sorry, I have to be moving these things a lot. Price opened from this point. Price actually opened from this point. Sorry, I gotta move this thing. Price opened from where the middle dot is, and then traded up, and then rather traded down. So usually I will be waiting to set up. For now, what was actually available was there was a small gap here which price was supposed to trade into. So price actually traded into the gap. Someone asked me, why wouldn't I have to say put my buy here at this level, because you feel that this is an order block and which has been bounced off this particular order block here. So why don't I place my buy here? Well, I won't say that is a wrong entry, but then let me show you one secret. um price is fractal. Okay, so we have long-term lows and highs, and we have short-term or interim lows and highs. Okay, so let me show you the long term. We had a long term high here, which price was actually bounced off. This was a high on this candle. There was a high here. Okay, which price actually bounced off it from here. It traded into it and bounced off. So now this is another long-term high. Anything inside this is a short-term low. Anything inside is a short-term low. And we have already said the premise that with that particular trading, price was never going to trade below the mean threshold of this. And there is another short-term high somewhere here. There's a short-term high here, a short-term low here, which means that there is liquidity below this. So normally price was going to trade below this particular liquidity point and took down the all the sell stops that people have moved their stop losses here and all that, or what's the name, take profit levels and stop losses here. Price would usually trade to this level and take all the stops and begin to rally up. That is the normal, that's the usual. Okay, so basically that's what happened today. Price had to trade into and then come down to the, so immediately price hits this order block here. Again, the second time it was a good entry, and I knew that if I take the entry here, I put my stop loss just at the mean threshold of this candle. Sometimes I put my stop loss very close to my entry point because I'm more coincides with my entry. Right, so basically that is all about to what's the name, breaking down the week's um lows and high. Okay, so now let's continue. When you look at the market too, we can see further that there are some, this is the whole week, this is the whole week, this is a whole week of trading. Okay, this is a whole week of trading. This is a whole week. All right, that's from here to here, one end to the other end, the whole week, and that's last week's too. Where are their various highs? So we had the whole week. We had the high of the week for last week and last week, almost forming an equal high. And what is your expectation for this week? It should take down those two highs, especially when we are in a bullish market. And look at what the market is doing now. Now it has taken down the highs of both. It's taking them down now. The market is still trading. It's live. It's taking them down now. You get it. So that is basically the premise. So immediately price was bounced off this week on the same order block. My premise was that price is going to go back up and take down those highs. Someone said that sent me a message and said when he saw this, especially when he saw this bullish, sorry, why is my, when the person saw this bearish candle formed in here, he said he feels the market was going to reverse because he feels that this is an order block, and that price must reverse and all. And I told the person that okay, I was going to give you another trick, and it is this: anytime you feel that price is reversing along equal highs, and there is a bearish candle which forms usually before price takes down highs, that that particular bearish candle is not that particular zone is not, doesn't form any other block. So one of the things you should know is that the higher time frame premise holds more than, so this is H4. Let's go to the daily. Do you see any other block at that zone where price should reverse? No. So the higher time frame premise holds more than with the lower time frame premise. Okay, so anytime that you have price showing you things on the smaller time frame, believe what the higher time frame tells you more than what the smaller time frame tells you. Okay, All right, so it wasn't an order block. It was actually, this has actually now formed a mitigation block. Okay, this has actually now formed a mitigation block. So if price should trade and come back to it again, I love my mentor so much that he teaches a lot of things that, I mean, no one actually teaches. Michael, he's just the best in the forex market. He's just the best in all other market I can think of. His his knowledge works all around. Michael, I always salute you for the deeper knowledge and the insight that you keep sharing with us. I love you so much. I pray that I meet you one of these days. I know it's possible. Some people say, "Oh, where are you going to meet Michael?" Oh, with God, all things are possible. I have a very, I have a very strong faith. All right. So basically, that is it with the 4 hour and the weekly. So price must go and take down both highs. And what's the expectation? As price has taken down those highs, I'm expecting price to push further up. Okay. Now let me show you another. Let's go to the 1 hour time frame so that you get further breakdown of the market, so that you have a fair idea of. Okay, so now look at today. This is the whole of today, and this is when price had to come and chop the lows below this, and it formed like a turtle soup setup. That's what my boss Michael will say, a turtle soup. So when price just eats into the lows and quickly run away with it, right? That's a turtle soup setup. It's so nice, you know. So last 2 days, price when price opened, okay, last 2 days, this was the market. That's the how market traded. It was just price was just accumulating here, although it traded into an order block on the 1 hour time frame, but funny enough, okay, funny enough, oh, funny enough, let me show you something going down to, let's say, 30 minutes time frame, so that I'll show you something that happened. Yes. Okay, so you see this bullish candle here before that bearish move. These are institutional orders. Okay, these are institutional levels that sometimes you won't get to hear them anywhere, but from my mentor, this is typically when the buyers are coming into the market. The buyers begin to frame this kind of market. Immediately you see this bullish candle and there's a push down after the bullish candle. What it means is that they are just manipulating. Okay, so let me go down to a smaller time frame. You will see clearly the manipulation very well. Okay, good. So this is 15 minutes. Let me go down to 5 minutes. Oh, I hope it doesn't take me too far. Uh, where is it? Where is it? Okay, so clearly you see that there was an accumulation here. Okay, clearly you see that there was an accumulation before the blue line, the green line begins. You see that there's an accumulation, and the market just falls below, anywhere below that. Let me come back to the 30 minutes. Anywhere below. Okay, so let me quickly highlight this, where there's the volume. Oh, okay, I think it's okay. So then let me come down to 5 minutes and go back and get it right for you. You see where I've highlighted, that is where we have the volume for the market. Anywhere below that, within that range, within that shaded portion, that is where the market has actually set its buy orders. So the market has to actually manipulate it by just selling against. These are just areas where there are not enough volume. So market trades and go up and comes back again. Goes down, sorry, and then begin to rise and goes up. Now let me show you something. You notice this is on price comes back to this level, and then if I had placed this line, if I had placed it very well, you will notice that it would have touched exactly. You are using the laptop, you would notice it would have touched exactly the bottom of this candle here, the bearish candle that just touched and then began to shoot up. Yes, you would have noticed that it would have touched exactly. So that's where buyers actually begin to come in strong into the market, where we have volume. I'll take my time, and one of these is explained further into that. So let me go back to my 30 minutes time frame. All right. So this is where the market, there's actually volume for the buyers, So if we have this, if we have this as an order block, okay, if we have this, sorry, if we have this as an order block, you have this bearish candle as an order block, the place where the block actually started is where the buyers came in before the down push, and then I'll take my time and explain this in another video. All right. Okay, so basically price came to touch it, and then it bounced off it, and then price went up slightly and traded into this order block here. It came into the mean threshold of it, and then it bounced back up, and then it went further, and then this morning too, it came down to take the lows below it, and then here we go. It has gone to take the highs of the week. All right, so what is next as the market has gone to take? So you go to the chart. Let's say market has taken down the highs of both last week and this week. So the question is, what is next? What is next? Then it takes us to go down into a higher time frame and look up and see what's next. Okay, so let's wait for the closing of today's candle and see our way forward, so that I'll give you further breakdown of what we should expect on the market, and then we see our way forward actually. Okay, so look at where I've placed my current line. What do you see? So I have a question. My question for today is, where I have placed my current line, what do you see? So I want you to send your answer to my comment section. If you actually following me and watching my videos, send your answer to the comment section, and then hope you enjoy. Please, so do kindly. I just also want to take this opportunity to say that I'm not doing the videos to enjoy any profit from anyone. I just feel like sharing. I just share. All right. I don't have any intentions of. So I had a chat with one of my followers. He was asking whether I should why don't I want to take anything for the services I'm rendering. I said, oh, I'm okay. I'm okay with life by the grace of God. So I don't have any intentions of requesting for any sort of. The only thing is, you can share the videos for your friends to like, and then also enjoy whatever you are enjoying. If you feel that the videos are good for you, share for others to also enjoy it. All right, just that's all. Okay, so like, subscribe, share for others to join, basically. All right, so do have a nice evening. Will link. So if you want to join my group, as I said, I think I've not mentioned it now. Okay, so I have a group that I will be sharing a few tips here and there. I don't have to be recording video all the time. For the group, or what is a WhatsApp group, I have to frequently be sharing things. Sometimes maybe entries and all that. So if you're interested, you can post a comment in the comment section so that I'll figure out how to add you to the group. All right, so do have a nice evening, and then stay blessed.